Welcome back to my YouTube channel. If there is one lesson that it's beaten to me more times than I could count, is this it is this that market doesn't pay you for being right, but by being doesn't pay you for being right, but to being right, and being right means you've waited for a setup to form. Each for excitement and craving to press the button is a poison to trading. Big money is made with big moves, and big moves presents after you've waited. Patience being the key that you've been searching to unlock your financial doors. Today, I am going to analyze the current trend in the Forex markets, including the US dollar and the gold. So let's quickly dive into the US dollar index. This is a US dollar index chart. So what is a US dollar index? US dollar index, this is a basket composition of all currencies of different nations. And this pair holds more weight than any other pair. It is the one that sets the trend, and it really helps in identify potential directions of the market. If you can master this chart by applying ICT concepts, the same concepts I'll be highlighting in one of the most simplified versions for you to understand. So I've mastered one thing which I've really honed, and it has helped and improved me at trading. It is that I've mastered the art of being patient, and this discerns a professional from a cook. So a previous high, this one, was swept on a daily time frame. This is a daily time frame, and we've been seeing market rallying down. A close look, you'll notice a BC. This is a BC because it is a fair value gap which has been formed by upward candles. This is a bullish candle, and a gap has been formed here with upward candles. So this is a BC, and as you can see, this bearish candle has completely closed this BC, and then reversed to this daily inversion fair value. Now this one becomes a daily inversion fair value gap because we can see this candle closing completely and below the BC, the fair value gap. And BC, by the way, BC stands for buy side inefficiency, sell side inefficiency. Okay, so we can see this one becoming an inversion fair value gap. Now this is a daily inversion fair value gap, and you can see this bullish candle came and retested this, and we can see it has been rejected because we can see it didn't close above the candle, but below above the fair value gap, but below the fair value gap. Okay, so which means we are currently market is trying to reject higher prices. Okay, so these will act as a potential resistance, hence poise the trend to rally downwards. We can see an old low, and possibly these lows may try to draw liquidities. So these are the lows, because when you look at the left, we don't see any other. This can also be our low. This one, let me highlight it, this one. But this low is relative to this low. So these are high likely relative equal lows, which contains a lot of liquidity, and market might try to come and trigger these sell stops. So we can see this is an inversion fair value gap, market rejecting higher prices, and high likely this is where we are currently aiming for these levels. So use this to journal your trades, because if you are not ready, don't dive into trading. So these are space where it will help you to build your confidence and to help you to navigate the market easily. Okay, so the market is full of noise, full of half moves, and it's your responsibility to wait for an A plus setup to form. Folding weak hands is not about missing out, but it's about keeping yourself prepared while conserving your capital. So I'm going to jump into the Euro USD chart, because I'm not going to take a lot of time here on this video. So on a daily time frame, after some sell stops were triggered, and we can see this is a balanced price range, because market closed above this fair value gap completely, forming another fair value gap. So this one, this is our balanced price range. As you can see, these sell stops being triggered and balanced price range acting as our support and triggering higher prices. So we can see an old high, like our likely buy stops, and we can target these daily highs as our buy stops or our draw on liquidity. Remember, this platform is all about journaling your trades, and you can use your demo accounts so that it will help you to navigate and build your confidence and trust in your setups. Okay, so if you've been doing the work of and studying quietly, waiting for your spot, you can have insights on what the market is trying to communicate, and you will know when to step aside before you take a trade. You will have to figure out when to enter, exit, and sit over the fence. So this is the only game that rewards you for doing nothing, absolutely nothing. You only need to be available when these setups are forming. So when you see this kind of setups like fair value gaps, breakers, order blocks, so those are the ones which are going to really keep you active, because those are the ones which you are going to observe throughout your trading journey. So on a 4-hour time frame, what I'm seeing is I have this fair value gap on a 4-hour time frame. So this fair value gap will potentially act as our support for higher prices, this being our buy stops. So market might try to, so this is the path I'm going to use. So market will high likely come like this, then try to rally at these levels. Okay, so be patient and wait. You can narrow down to that 15 time frame to, after this place has been triggered, this fair value gap, you can go down to the 15 minutes time frame, so that it can help you to enter into trades and minimize on stops. Okay, so with that, I won't dwell into anything else. I won't engage myself or you into any pair, even though gold has formed a good charts using these ICT concepts. So you can go to the gold, highlight this okay, the PDRs from the breakers, from the fair value gaps, from the turtle soups, sell stops. Okay, so you can go and highlight them from the weekly time frame. I'm going to take you to the weekly time frame, daily time frame, and a 4-hour time frame. Those are the major time frame which will help and guide you to navigate these markets or these charts. So with that, I'll leave you so that you can go and journal. I'm not asking anyone to trade because this is not my money, it's your money. And if you decide to go in with the live account and something happens that you lose all your money, remember it's you who pressed the button. But if you're here just to learn and be patient and accept and having the courage and the to trust your setups and your trades, so this is a platform that will help you grow in this trading journey. So with that, I'll leave you. Enjoy your weekend.